Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on this Monday, the 2nd of September. I'm Nadine Blaney, and joining me in just a moment will be Josh Gilbert as well from eToro. But just to set the scene, we love a scene setter around here. We'll pull up the COB Australia Index, still into positive territory. So up by about 0.1%. In fact, the last of the day's trades have gone through the COB Australia Index. We still do have the laggards, some of those trades going through the S&P ASX 200. I hope we can remain in positive territory. We are sitting at 8,112, up by about 0.25% for the S&P ASX 200. Josh Gilbert from eToro, as promised, is here. Hey Josh, I know it's not much, but I do think it's nice to start this new month with a bit of positivity, don't you?
I think it is. I think everything I've read this morning is just sort of saying how the September is the worst month for markets, and so it's nice to start, I think, on the front foot. And yeah, I mean, look, they aren't wrong. History does tell us that September hasn't been a great year for markets over the years, and today driving us really sort of those two massive sectors in conflicting moves. Really had the miners a bit of a drag after that Chinese data at the end of last week, and then financials sort of really helping drive the market a little bit higher. 52-week highs from CBA and Westpac. So yeah, two ends from two of our biggest sectors today.
Yeah, I'm glad. Thank you for mentioning that about CBA, because I've been sort of distracted, unable to check, because I thought we might be sort of pushing up against some significant highs for CBA. Amazing. It's just going from strength to strength. And that's in keeping with some of our three themes today. So the big banks helping to push this market higher. Josh nailed it. Iron ore is a bit of a swoon, so that is weighing on the miners in particular, and gold as well. So I think we overstated it a bit. I don't think gold is quite gutted, but yeah, gold is one of the underperformers as a sector. And Bellevue Gold was one of the laggards from reporting season. It's down significantly, but I mean, you've got Evolution off by 3%, Northern Star down by 1.3%. So I will note, though, that I spoke with Michael Gable from Fairmont Equities on the trade today. You can find that online, ausbiz.com.au. He reckons gold is still going to go much higher from here, and he named a couple of the smaller players in the gold space that he'd be buying now. All right, let's get across some of these sectors. Telcos, a bit of a mixed picture here, but we do have Telstra up by about 0.1%, and Spark New Zealand as well. Not much else to say here except Aussie Broadband really weighing on markets overall. So yeah, telcos are one of the underperforming sectors, but let's stick with the positives. 7 of 11 sectors higher today, financials being the best performing, and also best performing over the past few days. It's been up by about 3%. Here's those miners that we were both just alluding to, with Rio Tinto off by 1.8%. And there you go. Here's the detail from the gold miners. Evolution off by 3%, Regis Resources off by 2.6%, and De Grey Mining off by 1.5%. Well, Josh is standing by, but I'll run you through some of these corporate stories today. Look, it's always a bit of a fizzle when reporting season wraps up, isn't it? We heard from REA Group today saying that it is mulling a bid for the UK-listed Rightmove. Shares down on that news. Downer EDI is having yet another good day. That's after a 17% jump on Friday in the wake of its profit result. Yeah, Bellevue, I mentioned, bad day to come out with must have been a clearly disappointing result. It's interesting, though, because it was its maiden full-year profit of $75 million. And Imugene shares are up by 8.8% after the release of, quote, promising results from a trial of its cancer treatment in 10 patients. Its net loss came in at $150 million in 2024, and Star still halted, failed to report results on Friday when they were due. And of course, there's big questions over its ability to continue as a casino operator. So Josh Gilbert, eToro, is here with me. Look, you can comment on any of those stories if you like, or my first comment that, we're so busy in reporting season, but we always miss it a little bit when it goes, don't we?
Yeah, I think so. It does keep us on the edge of our feet. It gives us lots to talk about. It's always a great look into, how these companies are performing. And, unfortunately, we do maybe get a little bit of, a bit of quiet when reporting season goes away. And unlike the US, when we get those sort of quarterly numbers, there's a little bit more to sort of focus on. I think, look, just looking at some of those corporate stories you mentioned there, Rio Group, I think, is an interesting one, especially to see that obviously the stock down. I think that's probably coming from this view that, they're probably going to need a cap raise to sort of fund the move. But I think that overseas push is sort of what the business needs to do to sort of really continue to sort of grow and not to see that growth stagnate. Obviously when it comes to the property market, we know it's a well-loved sector here, but there's only so far that growth can really get to before you've got pretty much everyone in the country using one of those, two apps, Ria or Domain. And I think Car Group have been a great example of sort of really seeing that overseas expansion very well. Full year results were came through very, very well and showed growth in overseas opportunities where they'd gone to market and acquired. So look, market doesn't necessarily like it today, but I think that's coming from this idea that it is quite a big acquisition and they probably would need to do a cap raise. But I think longer term, I think it would be pretty positive for the business all in all. Rightmove, having a quick look at the numbers earlier, has done pretty well over the last couple of years, decent revenue growth as well. So, both businesses align pretty well.
All right. Look, it's a holiday in the United States. So this is the unofficial end to the summer holidays for most folks there. So clearly we won't have a lead to key off of tomorrow. There are still some laggards coming through from quarterly reporting season there, but not really big names. I mean, NVIDIA was it was the peak last week, if we're honest, right?
Yeah, absolutely. I think there was even watch parties, wasn't there, going on in the US in pubs and people drinking and things like that. So it certainly dominated the headlines. And look, it was one of those, reports that I can't remember the last time I've seen so much hype around an earnings report. In that sense, it was huge. Everyone was sort of felt like they were sort of talking about it at the time. But I think NVIDIA itself, if we just focus on that just for a second, I think it's maybe not having as much as an impact on the indexes that we've seen in the first half of the year as well. I think there's maybe a little bit more legs to the bull market than just sort of this AI demand. Earnings growth came in at over 11%. GDP last week was revised upwards to sort of 3%. Obviously, we'll get those non-farm payroll numbers later this week as well. But yeah, a little bit less going on in earnings season in the US. But as I say, so far, it's been a great earnings season. Only sort of a couple of names tickling through this week, the likes of like Broadcom, Dick's Sporting Goods, just to sort of name a few. But yeah, for now, those big names have been and gone. And I think we can take away that it's been a pretty decent earnings season in the US.
Mm-hmm. So when you think about the US consumer, still relatively strong. Of course, this week we will be getting a lot of the jobs reads. We get the JOLTS report, and then we get the non-farm payrolls report on Friday. I was reading some commentary, I can't remember from who, saying that this is the most important jobs report, in ages. Like, this really has the possibility of setting a cat amongst the pigeons.
Yeah, I think the market is sort of, eyeing this report because of the volatility that we obviously got from that last report and obviously what followed. The last time we got the non-farm payroll report, we obviously then had that sort of unwinding of the Japanese carry trade come through on the Monday. And obviously then markets sort of, went into a bit of turmoil. And that sort of was the first signal that we had that, we had the alarm bells ringing over a recession. And then obviously we had Jackson Hole and we had Jerome Powell ultimately signaling that they don't want to see any more cooling in the labor market. So it's been a big month when we think about the sort of the labor market itself, saying that he basically does not want to see, or they do not welcome any further cooling in that labor market. And I think that was a bit of a surprise to sort of hear from him at the time. But yeah, 100%, this is going to be a big jobs report. I think it puts a lot of weight on, what sort of rate cut we get, whether it's going to be 25 or 50 basis points. I think any weakness would raise those expectations of a 50 basis point cut. Looking just sort of earlier on today, markets pricing about a 33% chance of a 50 basis point cut coming to fruition. I think we already know pretty much that a rate cut is all but guaranteed at this point. But I think a 25 basis point is the move that the Fed, really want to go with. I think that that's what we'll get. I don't think they'll be forced into a 50 basis point move. But as we say, depending on how this non-farm data comes in, it does have the ability to sort of really shift that market expectation, shifts the Fed's move, and then shift risk assets. I think if a 25 basis point, I think is what risk assets are going to look for, particularly equities. Anything bigger than that, again, I think we get the sort of the fears over a recession again, and then it might feel like a bit of a forced 50 basis point cut rather than actually what the Fed wants to do at this moment in time.
Mm-hmm. All right. So some big risk events on the horizon, but to my earlier point, safe to say, pretty quiet tonight with the US on holidays, Josh?
Yeah, I think so. Look, it's still a busy week. You mentioned on the macro front, we have that jobs data, we have GDP data locally. We've got sort of manufacturing data coming out of the US later in the week as well. But again, yeah, I think it will be a quiet start to the week given that, and probably be a bit of a I think it will see quite a bit of low trade today. We actually had very, very similar when we had Nvidia's results coming out last week. We were sort of analyzing some of the moves on the S&P 500 before Nvidia's results, and we had a lot of moves on the options market. Some of the biggest options trades were basically puts on the S&P 500, just sort of covering investors covering themselves on what could have been pretty poor earnings. And then we saw some of the lowest volume all year in the day before the results as well. So I think we'll probably get something very similar this week, given how much weight is being put onto that jobs report you mentioned there, the biggest jobs report for a long time. Well, Nvidia's earnings report was the most important earnings report on the planet. So I think we'll see investors position very similar this week, especially with there being a holiday, quite low volume and quite limited movement. And I think we've probably seen that already so far on the ASX, barely a move, to the upside. So.
All right, Josh, well, always good to catch up with you. Really appreciate your time today, and we look forward to doing it next week.
Thanks, Nadine. Great to see you. Take care.
Josh Gilbert there joining us from eToro. I've had the chance to speak with Josh a couple of times in the past few days, so that's nice. Endeavour Group was the stock of the day. Woolworths selling out its remaining stake in the drinks company. David Lane, Ord Minnett, and Kai Chen from MPC Markets weighed in.
We saw that Endeavour has suffered as far as the results were concerned. Their last result indicated that they have seen a softening as far as their overall earnings. But we are predicting that has probably seen the worst, and that going forward we will start to see some earnings improvement from Endeavour.
But in terms of growth, it's not really a stock that where you can really expect to see a lot of growth, because they actually own such a big market share in terms of the overall liquor sales, right? About 60% of the overall market. So I think it is smart that they're going into property, but in terms of growth, we're not really expecting to see that much for Endeavour Group. At these prices, they are cheap. I agree with David. I think, if you've already got the stock, it's at a cheap valuation, but we're not excited to get into this stock.
So that was a bit of a myth from both of the guests, putting a hold recommendation on Endeavour. Let's see what led this market higher today. SmartGroup, Helios, Lavisa, and Waypoint REIT, along with NIB Holdings. And look, there's no real news. This is post-reporting season moves, I think, fair to say, on a lack of any really big corporate news as well. Just noting that Webjet has fallen into negative territory as Macquarie lowered its price target on the company. There's some great notes going around, from some of the big investment houses. Also, Harvey Norman shares have slipped after Macquarie cut its price target and estimates going forward. But Downer is at an over 2-year high as Macquarie has upgraded its price target and its earnings forecast. Okay, so that's takes us to the laggards. Nothing much here has changed throughout the day, which is interesting to note in and of itself. We do have Weebit Nano. It is a very volatile stock. It's off by 14%. Red 5, no news that I can see there. Tabcorp off by, close to 6%, but don't forget it is trading ex-dividend. We'll have a lot of these companies trading without their dividend in the coming couple of weeks. Post-reporting season, of course, and I was speaking with Rachel Waterhouse from the Australian Shareholders Association a little bit earlier on. If you'd like to find that interview, you can do so on ausbiz.com.au under the latest. And she was just pointing out, don't forget that we are now on the cusp of AGM season. So when shareholders really get to put the questions to the board and management. So yeah, looking forward to that as well. Cettire, a big rebound, obviously was battered and bruised last week in the wake of its result, up by 32% today. Its price target cut 23% by Bell Potter, but still at $2 per share. And EZZ, one of Juliet's favorites there. We never know what to call it, EZZ, but Life Sciences, one of the best performers. Cogstate down by close to 12%. That's one company that we used to speak with quite a bit, and I've kind of lost track of what's going on with it, but I can't see any news behind that move today. We'll look into it, though, for you. So tonight, as we've mentioned, not a lot on as far as the United States goes because they're closed, but we do get the Eurozone final manufacturing PMI being released. Here tomorrow, we do get the balance of payments from the June quarter, so we get a lot of these partials that feed into the GDP read that comes midweek. And of course, everybody's very much looking forward to hearing from Michelle Bullock a little bit later in the week. I don't know if you read that article in the Australian Financial Review that was quoting one of the head, well, he's now former RBA, but he led their research department, just questioning some of the rhetoric coming from, the RBA and politicians. It's worth a read anyways, if you haven't had a look. But I would also say we've got some great interviews up online. If you would like to have a look, if you're listening to us in podcast form, I do hope you know what a wealth of information is contained on ausbiz.com.au. You can catch up with any of the interviews that we've done throughout the day. CEO interviews, we've got lots of them still up there from reporting season, and of course market analysts, investors, professional money managers. Raymond Chand is one that comes to mind today. He gave me the verdict on two of his performers from reporting season. I'm not going to give it away. You might have to go and have a little look-see on the website, ausbiz.com.au. Great to be here with you today. We'll see you live from 9:45 tomorrow.